talk today about bond for deeds. Yeah, bond for deeds, owner financing. So showing some property this weekend, the homeowner happened to be there while we were looking, no big deal. However, he started to, or wanted to make sure to share the information that he would be willing to owner finance the property so that the buyer didn't have to worry about getting flood insurance on the property, which would save her, a couple $1,000s a year. So it kind of red flagged me, and then my buyer got obviously intrigued because you save money, you say. So there was one of those things where he's kind of just putting out false information. So bond for deed, a really great, viable way for you to get onto the road of home ownership. So it bridges the gap from where you are and where you need to be able to transfer into a conventional or traditional financing. So what that does is you are treated as the homeowner. You write that contract, everything's negotiated, it gets recorded in the public records and all that. However, it is negotiated between, agents, and then there's a title or an escrow service, a licensed escrow professional that will take care of that for you. You don't just talk about it with the seller and then agree on those terms. Everything is fine when everything is fine, right? We all know that. And then when things go wrong 6 months later, you want to make sure you're protected from the get-go. So if you can't get traditional financing and you do have some money to put down, there's typically a bigger down payment that's required for that. And you do want to start, building in towards your equity and kind of getting into or bridging that gap from where you want to be. So you get into the home, we write that contract, it gets recorded, it's processed just like a regular sale. However, everybody is protected. The beauty of this is the flexibility that's afforded or allotted to you within the negotiations. And so it's completely between the buyer and the seller. Whatever the terms that are agreed upon is what is, we don't have to do an appraisal. It is optional. You can always do that. You don't have to do an inspection. I do recommend an inspection always be done just to protect both sides because, like I said, everybody's happy when everybody's happy. And then 2 weeks later, the water, something's wrong, and then we want to talk about it. So let's just kind of get that all cleared away. Also, it helps you know what you're getting into, right? So if you're okay with the condition of the home, I don't know, you might be able to sheetrock and you're not worried about anything. It doesn't matter. I just want to, from the get-go, from the start line, provide you all the information that you need for you to make that informed decision before you move into this contract. It is a binding contract. Like I said, it is recorded and processed just like anything else. So contrary to popular belief, you do pay insurance and you do pay taxes and you are treated like the homeowner. So like I said, the only thing that is different is that the title is still held by the seller, just like it would be held by the bank or anybody else until you close or finish out that loan. What happens in the 2 or 3 years, depending on what term you guys agreed upon, instead of going through just a regular mortgage type loan, you would just do a refi, which is a refinancing option, which is a lot easier for you. So you save on closing costs up front because the fees are minimal. You don't have to do the appraisal, so that saves you money there. You're building equity towards the home you want, and you're really becoming a homeowner early on before you're actually with all those guidelines and all the red tape, I guess, you have to get through with the traditional financing. So if you're thinking you want to move forward with this, you have the cash, it's just, your loan ratio or your personal ratios are wrong, or your loan to value, your debt to income, whatever it is, your credit's not where it needs to be. None of that matters as long as the seller is willing to negotiate with you and as long as you're willing and agreeing with the terms that the seller is putting out there. So if you want to do that, you can contact us. We can help you find some properties. It's actually a field in the MLS. We can just search it that way and pull up all the properties. And or we can sometimes contact some of the sellers if there's a property you're actually really interested in and propose that to them. Sometimes the sellers are in a situation where they also need to do a bond for deed only for their personal, like for their financial situation with the home. So it kind of works out to be a win-win as long as you're protected with an agent, with a licensed person doing it, without cutting any of the corners, just making sure that it's just legitimately a legal, clean, safe way for you to get on the road to home ownership. So if you have any questions, you can call me. Bond for deeds are great. Owner financing would be the way to go. It may be the option for you if you're not where you need to be right now. 985-327-9058.